traders, hope you are well wherever you are. It's your boy yet again with another interesting video to assist you in your Forex journey. So today we're gonna talk about my trading strategy. Guys, I want you all who wanna make it in this Forex industry to stop whatever you are doing and give me your whole attention because this is what you're gonna need. I promise you. By the end of this video, you're gonna have that strategy you've been wanting for so long. Now, let's begin. Before we dive into today's awesome content, I've got to tell you, there's a really unique moment coming up at the end of this video. Seriously, stick around for the big reveal because I promise you, you're gonna love it. So here's my full trading plan. My trading strategy is called the ICT+CRT. So ICT stands for Inner Circle Trader. Inner Circle Trader is a person. This is a person who came up with his concepts and decided to share it to the world. It's free and you can find it at YouTube. Just type the Inner Circle Trader and you'll find these videos. And the CRT stands for Candle Range Theory. It can be used in any type of market. It can be a forex market, an indices market, a stock market, a bonds market, whatever you're trading. The first thing you're gonna learn, you need to know which type of trader are you. We have different types of traders, and if you know the types of traders, you can skip this part and go to the next part. So the type of traders, a scalper is a person who trades within minutes. Okay, opens a trade and closes it within minutes. That can be 30 minutes, maybe 15 minutes, maybe 45 minutes. They do not stay long in the market. Okay, we have a short-term trader. A short-term trader is a person who opens and closes his or her trades within a very short period of time. It can be maybe 1 hour, maybe 4 hours, maybe 2 hours. An intraday trader is a person who trades within a day, opens and closes his or her trades within a day. These two here are types of intraday trader because they trade within the day. We have a long-term trader. A long-term trader now is a person who opens and closes his trades within a couple of days, maybe 1 day, maybe 2 days, maybe even a week or so. Okay, we have a position trader. A position trader now is a person who opens and closes his trades within a very, very, very long period of time. It can be months, it can be years, it can be even decades. Okay, knowing which type of trader you are, it's gonna be essential when handling the time frame alignment. We now go to the DXY. Analyzing the DXY helps us know the direction of the US dollar currency in other currency pairs such as the Euro USD, the GBPUSD, the USD JPY. Okay, it essentially tells us what is the direction of the US dollar in these currency pairs or any other currency pair with the USD currency. As simple as that. Okay, so let me explain a little bit of DXY. Okay, so let's give an example of the Euro USD. We have the Euro USD, and this is a currency pair. We have the Euro and we have the USD. The Euro is the base currency, and the USD is the quote currency. In this currency pair, when one of these pairs buy, another one sells. Okay, and when one of them sells, another one buys. As simple as that. So if we analyze the DXY and know the direction, let's assume that the DXY, another name of the DXY is the US dollar index. It's written as USDX in short form. If the DXY, let's assume it's selling, this means that the USD in this currency pair will also be selling. And that means that that automatically means that the euro is gonna buy. Okay, as simple as that. So we have the Euro USD. The Euro is buying and the USD is selling. That means that the Euro is strong and the USD is weak. And if something is strong, it means that it has more power. So the Euro will take the market up because the USD is weak and it can't do anything. The Euro is going to take the market up. This means that this pair is going to be bullish or it will buy. As simple as that. So analyzing the DXY helps us know the direction of the USD currency in other currency pairs that have the USD currency, either as a base currency or as a quote currency. So let's give an example of a USD JPY. Let's assume that the DXY is buying. Okay, that means that it is strong and the price it's taking the price up. That means that the USD in this currency pair is going to be bullish. Bullish meaning it will go up. Okay, so if it goes up, that automatically means that the JPY is gonna sell. Okay, and if the USD is strong in this currency, in the USD JPY, that means that the USD JPY is going to be bullish because the USD in this currency pair is strong enough to take the market up, and the JPY is weak, it cannot take the market up. So USD JPY is going to be bullish. As simple as that. Okay, and if a currency is bullish, that means it is strong. And if it's strong, the other currency will be weak. We move to the bias. Okay, so bias is just knowing where the market is going. Is it bullish or is it bearish? Is it going up or is it going down? Okay, before taking any trade, first you need to know the direction of the market. Understood? You need to know, is the market going up? Okay, is the market going down? If it's going up, the only thing we need to do is buy. If it's going down, the only thing we need to do is sell. We cannot the market cannot go up and then we start selling. This will eventually lead into losses. Okay, because the market is going up, that means that we need to buy. And if it's selling, we need to sell, no buying. Yeah, so that's simply what the bias means. And how do you know your bias? We know our bias by looking at the market structure. We know our bias by looking at the high resistance and the low resistance, and we know our bias by looking at the PDRAs being respected. So market structure is just the structure of the market. Is the market making break of structures to the upside, meaning that the market is bullish? Is the market breaking the structure to the downside and forming the market structure shift? That means that the market is bearish. So this is a simple diagram of a break of structure and market structure shift. If the market is breaking the structure to the upside, that means that we are bullish. Okay, and we need to take buy trades. And if the market is breaking the structure to the downside, that means that we are bearish and we need to sell the market. Okay, so this is how you know your bias. We can also look at the high resistance and the low resistance. I'm going to say this in the simplest way possible. Let me draw a simple diagram of the market structure, of a bullish market structure. Now this is a bullish market structure. Price may not always be what you want to see, but that's just an example of a bullish market structure. Now, talking of resistance, we have this is a bullish market, meaning that we are going up, we are heading up. Okay, in this market, we need to look at where has price tried to go down, but there was a resistance in bullish price action. Okay, an example of a resistance was here. So this is a high resistance. There was high resistance here because the buyers in the market refused to let the market go down. Another high resistance is here. Price wanted to go lower, but the buyers in the market refused to let the market to continue to go lower. Okay, so that's an example of high resistance. So when you go into the charts, you need to look for where there is high resistance. This is an indication that the market is bullish and it does not have the ability or the strength to go lower. Okay, so that's the meaning of high resistance. Okay, so low resistance is just simply the break of structure. As simple as that. Now we're gonna look at the PDRAs. PDA stands for PDRAs, and I'm gonna talk about that in a bit. For those who don't understand what PDRAs are, and for those who understand what PDRAs are, you might skip this part. Okay, so PDRAs in full they are called the premium and discount arrays. Okay, so these are ICT concepts, and I'm not gonna talk much about them, but if you want a detailed video of what PDRAs are or what do they mean, kindly comment down on the comment section so that I might do a detailed video of what they are about. So we have the PDRAs being respected. So PDRAs simply help traders to understand where price is likely to find support or resistance. Okay, where institutional activity might occur and where liquidity resides. Okay, so the market is divided into two zones. We have the premium zone and we have the discount zone. This middle part is called the equilibrium or the middle part. Okay, so this is the premium zone. Premium zone, we term it as an expensive zone, and the discount zone, we term it as a cheap zone. We traders look to buy in cheap zones and look to sell in expensive zones. Now, as I said before, premium discount arrays simply help traders to find support and resistance in the market. Just as I taught in my previous video about support and resistance, now using the ICT concepts, we find support and resistance in the premium discount arrays. Okay, and we have the types of these PD arrays. We have order blocks, we have fair value gaps, we have liquidity voids, we have breaker blocks, we have mitigation blocks. There are so many PD arrays. It depends on what you're using in the market. We have rejection blocks, we have highs and lows. If you don't understand what PD arrays are, kindly comment down on the comment section so that I may do a detailed video about PD arrays. Okay, but these are just ICT concepts. In general now, let's see how do we know our bias. If the market structure, we first look at the market structure, break of structure, as I have said. We look at the high resistance and low resistance. We have the high resistance, we have the low resistance. We also look for the PD arrays. If its price is respecting the PD arrays, as simple as that. Now that is how I know where my bias is. Now, after knowing the bias, we now head on to the time frame alignment. Time frame alignment is also known as multi-time frame analysis. Okay, this is just analyzing different time frames. We don't take trades in all time frames. There are specific time frames depending on which type of trader you are that you need to work on. Time frame alignment is a topic on its own. It's also a wide topic, but I'm just going to talk about it briefly. And if you do not understand, you can kindly comment on the comment section so that I may do a detailed video of what time frame alignment is. In time frame alignment, we have the higher time frame, we have the medium time frame or the intermediate time frame, we have the lower time frame. So we have the higher time frame consists of the monthly time frame, the weekly time frame, and the daily time frame. In the medium time frame, we have the 4 hour, 1 hour. According to my strategy, this is how I choose my time frames. The monthly, the weekly, the daily are the higher time frames. The medium time frame or the intermediate time frame are the 4 hour to the 1 hour. Let me say to the 1 hour. That includes the 3 hour, 2 hour, and whatnot. We have the lower time frame. The lower time frame now is the 45 minutes, the 30 minutes till the 1 minute. Okay, so that is how I group my time frames according to my strategy. This is the checklist which I use to analyze my markets. We have the higher time frame, we have the medium time frame, we have the lower time frame. You might want to write this down because it might assist you when using this trading strategy. So the higher time frame is used for analysis. Okay, we analyze the charts starting from the higher time frame. The higher time frames determine the overall trend. Okay, this provides us with the direction bias. So we start analyzing our markets from the higher time frames and heading down to the medium time frame, then to the lower time frame. Now, after knowing the overall trend or the bias in the higher time frame, we head on to the medium time frame or the intermediate time frame where we look for setups that align with the higher time frame trend. Okay, we can anticipate for PD arrays, like maybe the fair value gap. That is where we look for setups. After knowing after looking for the setup in the intermediate time frame, we now go to the lower time frame or the shorter time frame, and this is where we look for confirmation signals or entry models. Let's use an example of this monthly time frame. Now we head on to the monthly time frame. We do our analysis and try to know what is the trend of the market. Is the market bullish or is the market bearish? We try to know what the bias of the market is. After being done with the monthly time frame, we head on to the daily time frame where we look for setups that support the trend idea of the monthly time frame. We look for setups that align with the trend idea of the monthly time frame. Now, after finding the setup that we want, maybe a PD array, as we've said earlier, we now go to the lower time frame, of which is the 1 hour time frame according to our trading strategy. So this is where we find the entry models, just as simple as that. Monthly, the higher time frame used for analysis, the intermediate time frame used for finding a setup, the lower time frame used for entry models. Market manipulation models, these are ICT concepts. Okay, so it is also a very wide topic, and I'll make a separate video for those who won't understand deeply about it, but it's also an essential tool when trading using this strategy. Okay, so market manipulation models, they are based on AMD, the accumulation, manipulation, and distribution. And market manipulation models are used together with the weekly profiles. Okay, so let's assume you have the Monday, Tuesday, Wednesday, Thursday till Friday. So AMD might happen on Monday, Tuesday, Wednesday, or Tuesday, Wednesday, Thursday, or Wednesday, Thursday, Friday. You get the concept. Okay, so we can have an accumulation on Monday, a manipulation on Tuesday, and then a distribution on Wednesday. The best times to trade the market is when there is a distribution. Okay, these are the best time for the beginners. We trade when there is a distribution. When we anticipate there is gonna be a distribution in the market. Those who have a deep understanding of the market, the best time to trade is when there is a manipulation. Now, talking about correlated pairs, in Forex, there are currency pairs which tend to move in the same direction, and there are currency pairs which tend to move in opposite directions. Okay, let's give an example of the Euro USD and the GBP USD, which tend to move in a same direction. If the Euro USD is going up, that means the GBP USD will also go up. And when one of these pairs tries to go down when they were bullish initially, and this other pair looks like it's wanting to go up, then we have an SMT here. As you can see here, this price, the EU formed a lower high. Okay, initially it was forming higher highs, but here it formed a lower high, and GU, which is the GBP USD, formed a higher high, continued to go higher, meaning that this is SMT. Okay, guys, as simple as that. They tend to move in the same direction, but when one pair looks like it wants to go to the opposite direction, but the other pair looks like it wants to continue going to the same direction, then this shows that there is an SMT in price. We also have some entry models which we're going to talk about. So entry models, we have the CISD, we have the market structure shift with OTE, which is the optimal trade entry, and I'm going to talk about this just briefly. We also have the inversion fair value gap. This is also an entry model. Now, these are the three models which I like to use in the market. We also have a breaker block. So CISD is just a disrespected order block, and market structure shift is just a shift in market structure. When if the market is going up, then it shifts its market structure, meaning that the market is starting to go down. Then after shifting the market structure, comes to the discount zone, comes to the premium zone. This is the optimal trade entry. These are simply ICT concepts. So this is the optimal trade entry, and this is where I take my trades from, the entry model. Inversion fair value gap is a disrespected fair value gap, and a breaker block is also a disrespected order block. Okay, same as the CISD. Now we have reached the most important part of this strategy, the candle range theory. The candle range theory is just a strategy on its own, but it's very simple, guys. In candle range theory, every candle is a range, and within these ranges, price doesn't just move randomly. It often follows a pattern which some traders refer to as the power of three: the accumulation, manipulation, and the distribution. In accumulation, price moves sideways, gathering orders. In manipulation, the price moves sideways, gathering orders, then breaks either side of the accumulation. After price moving in accumulation range, it then breaks and then quickly reverses to the opposite direction. We have three candles here representing the accumulation, the manipulation, and then the distribution. Okay, so the first candle is the accumulation, the second the manipulation, and the third the distribution. So candle range theory is based on the liquidity rate of the previous candle range. Now this is the candle range, this first candle. The accumulation candle is the candle range. CRT is based on the liquidity rate of the previous candle range and then run to the next liquidity level of which is the high of the accumulation candle. Like if price grabs the liquidity of the previous candle's low, then we can expect the price to run towards the high of the candle and the vice versa. If you do not understand this, I'm going to get into the charts and explain in detail about the candle range theory because this is a very wide concept and I need you to understand this because this is the main strategy which I use to enter into the markets. ICTs are part of it. It covers the wider parts, but CRT is the most important tool in this trading strategy toolbox. Okay. Now we go to time zones. Time zones, these are simply the times you need to be in the market. They are also called sessions. When trading my strategy, the ICT plus CRT, the first thing you need to do when you enter your charts, you need to make sure that the time zone is in New York. As you can see here, you just press here, it will open this box. So you need to make sure that your time zone is in New York. Okay, UTC -4. Now after making sure that your time zone is in New York or UTC -4, you need to know about the sessions. What time should you be in the market to trade? This is about Forex, not other market, not indices, not bonds, not stocks. Okay, so we have the London session. The first session we trade in is the London session. The second session we trade in is the New York session, and the other one is the Asian session, but this is not used in basis. And my entries I usually take during the London session and the New York session. The London session, it begins from 1 a.m. to 5 a.m. New York time, as I said. Remember, I told you to make sure that the time zone you're using is New York or UTC -4. So the London session is from 1 a.m. to 5 a.m. The New York session begins from 7 a.m. to 10 a.m. This is the New York Open, the London Open. We also have the London close and the New York close. Okay, the London close begins from 10 a.m. to 12 p.m. I don't know much about the New York close, but that's not really important. The best times to trade is the London Open and the New York Open. Now, the next thing you're going to cover is partial profits. Taking partial profits is so important. It means securing some of your winnings when you have them. Don't let the dream of huge profits make you forget to protect what you have already earned. Force yourself to make money off the table, and you'll have a more consistent and successful trading journey. So that's all I'm gonna say about partial profits. Now let's talk about patience, resilience, and confidence. You need to have patience in the market. Trading is all about patience. Trading is all about waiting for the right setups. We don't take any trade that we see. We don't take trades without enough confirmations, at least 3 confirmations. You should be resilient. You should be confident. You should have that confidence when taking any of your trades. You should have that confidence when analyzing your charts. You should have that confidence when putting your take profits and stop loss and break evens and whatever. Now, it's time to get practical. Let's head on to the charts. On the right side of the screen, as you can see, we have our little trading strategy there. You can use it also as a checklist. So we're going to start from the DXY. And in the DXY chart, we're going to start by knowing what is the bias of the DXY. How do we know the bias? We start by looking at the market structure. Let's zoom out a little bit to see the market structure. So as you can see, the price is going down just looking by the eyes without even going into the market structure, meaning that the weekly time frame is bearish. Price is breaking structure. You can see that break of structure there. That's the first break of structure. You can also see this break of structure up here. So this is indicating that the price is going lower. You don't need to find the market structure, the PDRS and the resistance all together. You can just even find one or maybe two for enough confirmation. Like as we have looked at the market structure, we can see that the market structure is bearish. You can also look at the PDRS being respected only. We have this fair value gap here. As you can see, this fair value gap was respected. Price came and touched it and then started to go lower. We have another fair value gap up here, this fair value gap, which also price respected and started to go lower. This is the second indication that the weekly time frame, the DXY weekly time frame, is bearish. That's how we know our buyers. If you cannot see the PDRAs, you can look at the market structure. If you cannot see the market structure, you can look at the resistance levels. The next step is to know what the market is doing right now. Is the market consolidating? On my view, I can see that the market is expanding. The market is trending. And I can see that the market was recently going down, but then retraced. It made a retracement move and now it's going down. It's expanding to the downside. Now we have known the bias. The bias is bearish in the weekly time frame. We have also understood what the market is trying to do right now. The market is expanding to the downside towards this low here to come and form a break of structure here. After knowing what the market is trying to do, we go to the time frame alignment. That's our next step, the time frame alignment. And in the time frame alignment, you are going to analyze different time frames to see what is the direction of the market in general. Okay, so let's write here. We know that the weekly time frame is bearish. Now we're gonna step down to our lower time frame, that is the daily, and see what is the direction of the market. Is it bearish the same as the weekly time frame? In the daily time frame, we again start from the top of our trading strategy. We start by knowing what the bias of the daily time frame is. There is a break of structure here. That is the first break of structure. There is also another break of structure here. Now that's the first confirmation that the market is bearish. The second confirmation, we look at the PDRS being respected. We have this order block here, this plotted order block, as you can see, that was respected. We also have another order block here, which price came and touched it and started to go lower. That means that the daily time frame is also bearish. Price is respecting bearish PDRAs and disrespecting bullish PDRAs. Okay, so our daily time frame, we can write here, our daily time frame is now bearish. Now we have aligned our weekly time frame with the daily time frame. Both are bearish. That's a good sign. Okay, now we look at the daily time frame and see what the market is doing. Remember, we do our analysis in the higher time frames, the monthly, the weekly, and the daily time frame. But in the monthly time frame, there was nothing to analyze. In the weekly time frame, we got this fair value gap here, and we anticipated that price might be reaching for this break of structure down here. Okay, in the daily time frame, we have seen it is also bearish, and we have this order block which price has recently touched. Now we are anticipating that this price to come and break structure here, because recently we had this break of structure here, yeah, and price is respecting bearish PDRAs and disrespecting bullish PDRAs. We now need to understand what is the market doing. After knowing the bias, we need to understand what is the market trying to do. I can see that there is this order block which price has recently respected, and now price is expanding to the downside, targeting this low here and to form a break of structure, and then target this other low here to form another break of structure. That is what I'm anticipating. Okay, so now that we have known the daily time frame is bearish, and that is where we do our analysis from, because the higher time frames tell us the general direction of the market. Now let's plot our premium and discount arrays in the daily time frame. We have this order block here. This is our first resistance where price touched and started to go lower. Now, remember we said that in bearish trend, price should respect bearish PD arrays and disrespect bullish PD arrays. I can see we have a fair value gap here. this bullish fair value gap here. Now, going into this market, I am anticipating that the DXY, if the DXY is really bearish, I am anticipating that price to break this bullish fair value gap. Let me zoom it a little bit. I am anticipating that price to break this bullish fair value gap and then come and retest it, break it, come and retest it, and continue to go lower till it targets this low here. That is what I'm anticipating. Now, after plotting our premium on discount arrays, we're going to go to the market manipulation models and the weekly profiles. So we agreed that these two occur within the week. Now, we need to know which days we are in. We need to know which days are we trading in. So as you can see down here, this candle has formed on a Friday, and we analyze our markets during the weekend. So I'm going to play the candle through Saturday and Sunday. That is the Friday candle and that is the Monday candle. I always analyze my market during the weekends, and I don't normally trade on Mondays because on Mondays I wait for the market to tell me a story. That means that I wait for the market to tell me, to show me what it's trying to do during the week. What is the draw on liquidity during that week, that particular week. Okay, so as I said earlier, if price is bearish, we need to see it break or disrespect bullish PDRAs. As you can see, this fair value gap here, which was meant to be a bullish PDRA, was disrespected by price. This is the Monday candle. So price came and broke through it, and we need to see a retest to this fair value gap, then price to continue going lower. Remember, we are in the daily time frame. Okay, so we wait for the Tuesday candle to form to see what is the price trying to do. Now, here is our retest. Price broke, came and retest. In market manipulation models, together with the weekly profiles, each day in the week is expected to react in some way. For example, Monday can be an accumulation, Tuesday a manipulation, Wednesday a distribution, Tuesday can be an accumulation, Wednesday a manipulation, Thursday distribution, and so on. So in this particular week, we can see that price came and retested our fair value gap. Okay, now this is the only things that we need during this week are the ones that I've written here: the Tuesday, Wednesday, Thursday, and the candle range theory. Now, we say that candle range theory, we have the first candle accumulation, the second candle, the manipulation, and the third candle should be the distribution candle. Okay, so this is what I'm anticipating going through this week. I'm expecting the Wednesday candle to be my manipulation day. I'm expecting Wednesday to manipulate the Tuesday candle to sweep its liquidity, then starts to head lower to the low of the Tuesday accumulation candle. This is what I'm trying to say. This is the Tuesday candle. In market manipulation model, the high or low of the week is anticipated to form either on a Tuesday or a Wednesday. Those are just ICT concepts. I'm going to talk about it later in another video. If anyone is interested, kindly comment down on the comment section. In market manipulation model, the high or low of the week is anticipated to form either on Tuesday and Wednesday. Now going through this week, Monday did not give me anything important to trade or to look at. Tuesday came and retested my fair value gap which I anticipated. Now this is the day which I'll be focused on. After Tuesday retesting my fair value gap, now I will be expecting Wednesday to form the high of the week. Okay, now let's see the next candle. Or if it doesn't form the high of the week, I'm expecting the candle range theory. I'm expecting the Tuesday candle to be the accumulation candle, Wednesday candle to sweep the high of the Tuesday candle, and then the Thursday candle to head lower to the low of the Tuesday accumulation candle. Now let's see what the Wednesday candle formed. It did not form the high of the week, but it came and swept the liquidity of the Tuesday candle. Now this is the candle range theory. After sweeping the high of the Tuesday candle, we're gonna plot plot this as a daily CRT because you're in the daily time frame. Now this is the range that you are going to trade into. This is the daily CRT high, and this one, the low, we are going to term it as the daily CRT low. Now this is the range that you're going to trade in during this particular trade or during this week. Now that we have gotten our setup, we're gonna go to the short-term time frame where we take our entries from. Okay, now we are done with the market manipulation models and the weekly profiles. Now let's head on to the 1 hour time frame. Now, going into the 1 hour time frame, we can see in fact Wednesday formed the high of the week. The Monday candle starts from here. You can see down here Monday, Tuesday, Wednesday. So Wednesday formed the high of the week, just as I said. That is courtesy of the concept market manipulation, profiles, and weekly profiles. Heading on to this week, we are anticipating price to sweep the daily CRT high and go to the daily CRT low. Okay, so this is how we trade this strategy. After price sweeping the daily CRT high, the first confirmation you need, the first entry model you need to look for the SMT. You should look for another pair which positively correlates with the particular pair that you are trading. Like for example, the Euro USD can correlates with GU. The USD JPY correlates with the USD index. The Audi USD correlates with the NZD USD. Let's assume this is the Euro USD chart. The Euro USD should form a higher high like this, but the GBPUSD should be forming a lower high. The Euro USD forming a higher high, GBPUSD forming a lower high. This is an indication that price wants to continue going lower. Okay, that's what SMT is. Now, after knowing about the SMT, we now look at the entry model. We need to see where are we entering in this market, because we have anticipated where the market will be going. And we got our confirmation. The first confirmation is the SMT. The second confirmation is the high of the week forming on Wednesday. Now we wait for an entry model. We have an entry model. Remember when I talked about market structure shift with optimal trade entry? As you can see here, we had this market structure shift here. Price came and broke this structure. Initially it was bullish, then it came and formed a market structure shift, telling us that the market is willing to go down. Then it came and retraced back to the premium zone. As you can see, it's above the 0.5 level, the equilibrium level. It came to the premium zone, and that is where I took my trades from. Okay, guys. So this is the USD index, but I'm just using it to show you how to analyze the charts. But we don't trade in the US dollar index. This is the USD index, as I said, just tells us what is the general direction of the US dollar in other currency pairs. Now the USD index came and gave me an entry in the premium discount of this zone, placed my stop loss there, and then the first take profit should always be the 50% level. Now this should be your first take profit, then your second take profit, this level, then your third take profit should be this low, this break of structure that we talked about here in the weekly and daily time frames. Okay, now let's see how this played out. As you can see, price eventually came and hit that zone there. Our stop loss was there, and price hit our take profit, then started to go up, but it didn't reach our stop loss. Then eventually came and hit our take profit. As easy as that, guys. Now this is the GBPUSD chart, the daily time frame, and we're gonna use our trading strategy checklist to know what direction do we need to take in order to analyze our market. So we're gonna start from the DXY. We're gonna start our analysis from the 26th of June, this blue line here, 26th of June 2025. Okay, let's go to the DXY, 26th of June 2025, the blue line here. As you can see, just by looking, the DXY is bearish. Okay, the DXY is bearish. The bias is bearish. You can see that there is a break of structure here. This is a break of structure, meaning that price is willing to continue to go lower. Okay, we have PDRAs here which have not been retested yet, but the price, based on the market structure, the price is bearish. Let's go on to the GBPUSD. Now that we know the GBPUSD is bearish, just as I said before, when I was telling you about the US dollar index. The US dollar index is selling. That means that it is weak. And in this GBPUSD, you can see that this in this currency pair, the USD being weak, that automatically means that the GBP pair is strong. And if GBP pair is strong, that means that the pair is gonna buy. And as you can see, the market is bullish. Okay, no need to do some analysis here, no need to know the bias, but just by looking at the DXY, we automatically know that the GBP is strong. That means that this GBP USD is bullish, and we are going to take only buys from this market. Now, looking at the 26th of July, let's see what the market is doing now. The market, I can see it is expanding. It's not in a consolidation. And we're going to plot our premium and discount arrays. The PD array I can see here is this fair value gap. This is what I want to talk about now. You can see that PD array. Now let's assume we were on 26th of June. Then we waited for 27th of June to form. That was on a Friday. Now, after the Friday, we went on to the weekend. Then we went to Monday. Now, Monday came and tapped this fair value gap. And during the weekend, we were anticipating that price is gonna tap this fair value gap either on Monday, Tuesday, or Wednesday, but probably, most probably Tuesday or Wednesday, because remember when I said market manipulation profiles or weekly profiles that the Tuesday or Wednesday tend to form the low or high of the week. So I was expecting Tuesday or Wednesday to tap into this fair value gap, continue to go higher to this external range liquidity here or break that structure. But when the Monday candle opened, it came directly and tapped this fair value gap. After tapping this fair value gap, we were looking at this range, this candle range here, this accumulation candle range here. Now this is where our candle range theory applies. Heading on to Monday, we were anticipating that price to sweep the low of this candle and then head on to the high of this candle, then to the external range liquidity or break that structure there. Now, this is our daily CRT low and this is our daily CRT high. We're also gonna plot our equilibrium level because that is where we anticipate taking our first profits from. That is very important because price sometimes tends to come to the equilibrium part of the candle range, then go lower. So that is where we need to take our first profits, our partial profits. Now, after price sweeping this liquidity, we need to head down to the lower time frames for our entry. Let's go into the 1 hour time frames. Now, we have known the bias is bullish from the higher time frames. We have known what the market is doing. The market is trending. It is expanding to the upside. We have aligned our time frames. The daily, it was bullish. Let's look at the 1 hour. Let's see what the 1 hour is trying to do. In the 1 hour, we can see price is also breaking structure. We have this break of structure here. We have this other break of structure here. Price broke this structure, meaning that the 1 hour is also bullish. Okay, we plotted our PD arrays, this daily fair value gap here. We also observed the market manipulation models. We anticipated that price to come and touch this fair value gap on either Tuesday or Wednesday and form the low of the week. But price came and touched it on Monday. As I said before, you'd never know what the price is gonna do. So you just trade with what the market gives you, not what you don't see. Okay, so Monday came and touched our zone. The next thing we need to look at is the pair which positively correlates with the GBPUSD, and that is the EURUSD. Now, on my charts, I have added the EURUSD chart. These two pairs tend to move in the same direction. If the EURUSD is bullish, the GBPUSD should be bullish. As you can see, the red line is bullish and also the GBPUSD is bullish. Now, we need to look for an SMT here. We need to see the GBPUSD forming a lower low and the EURUSD forming a higher low. Okay, that is what we are anticipating. As you can see here, this price at this particular position, the GBPUSD formed a lower low, but the EURUSD did not form a lower low. Instead, it continued to tell us that we are still bullish. Now this is what we called SMT. Okay, that is an extra confirmation in this trading strategy. After understanding the SMT that formed, We now look for an entry model. We have already covered the candle range theory. Okay, now we look for an entry model. The entry model are either CISD, market structure with optimal trade entry, breaker block, or any other strategy that we are going to cover in other videos. So we had this order block here. These two candles here are the order block. We had the market structure shift here. After having this market structure shift, we can see this candle, this black candle, returning to the discount zone of this pair. So that is where I will take my buys from. My stop loss, place it at the low of the SMT, and then my targets, my first target should be the half of this daily candle range theory, which is here. This is my first target. My second target should be the high of this candle range theory, and my third target should be the external range liquidity, the break of structure of this candle range theory. We've come to the end of the video, and I just want to appreciate you guys for sparing your time to watch this video to the end. I know it has been a long one, but I've only done this so that I may help people out there who are struggling in their trading careers. Remember in the beginning of the video when I said there's a catchy part at the end of the video? Now, I've decided I'll be posting my trading analysis every week and setups every day. I would just like you good people to kindly support me during this journey by subscribing to this channel, at least to keep motivating me to continue posting content like this for you guys. Thank you so much for your time, and may God bless you.